All right, last time we did a live stream, the S&P 500 was toying with the idea of giving you a bounce, and then you had a hard sell-off last Thursday. Now we have been on an epic tear over the last 5+ days of trading. You've seen the S&P 500 ramp over 150 points. Today now, you saw the S&P 500 drop about 0.2%. You also had the NASDAQ. It actually finished 0.3% higher. And then you had the Russell 2000 finished 0.2% lower. But overall, it's been a fantastic week of trading going back to last Friday for the markets. And that was pretty surprising considering that massive bearish engulfing candle pattern that we previously highlighted and how important that was, and yet how much it was pretty much just thrown to the wayside, thrown out with the trash, acting like it never even happened. You had a head and shoulders pattern. That's getting nullified by the markets as well. So in this video, in this live stream, what I want to do is I want to cover the S&P 500, the NASDAQ, the Russell 2000. I want to go over each of these, and we want to explore what is the market going to do ahead of the unemployment number that's coming out tomorrow. What is the employment number going to show us about the economy, and how can we expect the market to react? Now, one of the things that I would tell you is that the market's adopting two narratives right now. And those two narratives, the first one being that if the number comes in below expectations, that, okay, the economy's starting to pull back some, the Fed doesn't have a reason to raise rates anymore, and as a result, we can go ahead and rally the market because everything's fine and dandy. The other narrative is that if it comes in hotter than expected, then we have that soft landing narrative that everybody likes to throw out there. So on one hand, if the expectations come in lower than expected, people are going to start drumming up, just like what we've seen over the past week, which has been the large reason for this market rally. People are going to drum up the narrative of the Fed can't raise rates anymore because the conditions are deteriorating. The whole bad news is good news concept. But if it comes in hot, then we have a soft landing scenario or a no landing scenario, and not a hard landing or a recession. Recession's off the table. So you have two narratives there that are going to be essentially bullish in both cases. It's really it's up to price action to decide whether or not it's going to embrace both narratives. And I think that's why there's such a strong rally over the past week here in the market. So the other thing that you want to be cognizant of is the AI narrative. We've seen a lot of money go flowing back into all your big tech stocks. Apple, you've had Nvidia, especially, and Google. You haven't seen as much until today of a boost out of Amazon, but you've seen it in Tesla. You've seen it in a host Meta. You've seen it in these stocks. They're rallying, and it's all based off the AI narrative that continues to get pumped, just like in the 90s when we had the dot-com era bubble. So the AI is going to push it. Now we're going into the month of September. We just closed the month of August. It was the first down month that I think since March. I think we had like 4 or 5 straight 4 months there in a row where we finished higher. So now we're going in September, historically a bearish month for the markets, for the S&P, the NASDAQ, and the Russell 2000. Doesn't typically do good. What do you think you're going to see? A lot of the AI news narratives continue to get pumped out there. Why? The big tech leaders, the CEOs, the CFOs, the CTOs, all of these people, they understand what AI news releases mean for their stocks, what it means for their options. They're going to continue to pump those AI narratives until it stops working, until it stops goosing their options higher. So in September, I would expect a lot more hype about the AI. You even have Apple. They're rolling out their next flagship phone, the iPhone 15. I think they're probably going to be incorporating AI into that, because why not? They're fresh out of ideas. They need to put something in there. Why not do something that's going to drive their stock price higher simply by mentioning AI? So I think that's what we're really looking at here in the coming days. Also, make sure to like and subscribe to this channel. Make sure that you are posting your questions. If you have any, whatever charts you want me to look at, this is really an open forum for you guys here. I want to be able to discuss some of this in detail. I wasn't able to do a live stream on Tuesday because, well, we had a hurricane. I didn't get hit directly from it, but there was a lot of winds. School was canceled, and just a lot of things got thrown out of off course there. So we went ahead and canceled the live stream back on Tuesday, but I'm glad to be back with you guys here today. So again, make sure to post your questions and stocks that you want me to be going over in this live stream. Let's go ahead and get to the charts here with SPY. All right, so we have this rising trend line off the October lows. That has not been breached. That's the main trend line that we're watching going forward. Then we have a whole slew of lines that I also want to put forward for you guys to look at. This declining trend line off of the July highs. This was probably one of the most important ones because the price kept getting rejected off of this layer. So with this declining trend line, you saw price back on Thursday of last week try to break through it and a sharp rejection. This was a massive bearish engulfing candle pattern. So it looked like the dead cat bounce was done and over with. I exited my longs on that candle for good reason. We were rejected at the 50-day moving average. That's this red line right here as well. There was no reason to really keep holding on to those longs. And then ever since, the market's been trading higher until today. Today, we got a little bit of a minor pull at 0.2%. Nothing to get too crazy about. But essentially, the market is setting up for a potential run back to the highs of the year. There is some resistance here that I would be mindful of. This resistance seems to be taking hold here over the last 2 days. You had a rejection here, especially a hard rejection into the close, where price tried to get above it throughout the day, couldn't hold it into the close. You saw a sharp rejection there. That's major price level resistance at 452. And then you also have this other layer of resistance that was broken through. This little, I don't know what you want to call it, like a gray color here. That was broken through. So that was previously the resistance that was forming from this head and shoulders pattern that really has not come to fruition here. So I'll draw the neckline for this head and shoulders pattern and see what I'm talking about here. So this was the left shoulder, and then you had the head, and then you had the right shoulder starting to form, but it never actually confirmed, and then we just ripped higher. So with that being said, we pushed through the right shoulder highs. We can go ahead and delete that. I don't think there's a lot of merit to that anymore. So we still have the potential for a head and shoulders pattern, but it's going to be a much higher right shoulder. I don't have as much confidence that this is really going to materialize into something. I would expect that it'd be more likely we get a double top. And if we don't get that double top, we start forming new higher highs, then the trend line that we were talking about here going back to the October lows is still well intact. We're still putting in higher highs and higher lows. And so until that narrative changes, if we break the highs from July, there's nothing to be but bullish. So right now, how far this candle can get, if we can break back above these highs going back to July 27th, then that existing trend line remains in place. If it doesn't, then you have a lower high in place, and then you're looking at a retest of this rising trend line at 422 and a potential break thereof. Looking at the Qs, we had a similar head and shoulders pattern here. Left shoulder, and then we had the head, and then we had the right shoulder. And then you had the neckline right here. So a little bit different of a neckline than usual. You had the rising trend line off of the January low. So we're not using October because it kind of double bottomed right there back in October and January of October of last year, January of this year. Rising trend line hasn't quite come back to testing it yet. Did test the neckline of this head and shoulders pattern. Could not confirm it. Now we got that run for the last 5 days. You also have this declining trend line. This one's also broken here on the Qs. That's done and over with. You could make a case about this, the shoulders from the left shoulder and the right shoulder creating some resistance, but it's also broken through that as well. So the Qs are looking pretty good. A lot of that's because of the big tech. For instance, today, big tech was up more than the NASDAQ composite in terms of the NASDAQ 100 versus the NASDAQ composite. So from here again, I would expect there to be a test of these highs that was formed back on July 19th. Can you break through those highs? And then where do we go from there? And then finally, IWM. More of the head and shoulders pattern. Now, the head and shoulders pattern before wasn't quite there because we were working more like with a very non-existent right shoulder. But then you got this little pop off of it, and we're seeing a little bit of resistance here at the left shoulder that was formed. And so that could actually still be in play. You could see some weakness come into the small caps, even if it's not completely present in the large caps with SPY and the Qs. But that's one area to watch. You also have a neckline that we want to pay close attention to. That's where price on this yellow line right here has bounced off of it on multiple occasions. So keep that in mind. We want to be watching for this potential head and shoulders pattern in the Russell 2000. If this is going to ever get bullish, what do we need to do? We need to get out of this range that's been plaguing the stock since May of last year, May of 2022. Hasn't been able to do that yet, needs to get through it. And in order for us to do that, it needs to push through this declining resistance. So a lot of big things there. You have rising support underneath. So if this head and shoulders pattern does confirm, I think this blue rising trend line, that's going to be the next point of support for the stock. One more to look at here, and that's going to be the volatility index. Things were looking pretty rosy for this index. For those who are bullish on the volatility, it was looking pretty good for a double bottom breakout. You had your first bottom, your second bottom was going right up there against the resistance, but it could not break through and close above it. And that's why this resistance line, this purple level, has been so important since price broke back below it, because it can't get back above it at all. It keeps rejecting price. And so now we're testing a key support level. Are we able to, heading into the employment number, see another market rally that pushes the VIX below this 1350 level, or are we topping out here and we're going right back up to 18? That's going to be the big question going forward into the month of September. So with that being said, I hope you guys enjoy this video. You guys are a quiet crowd today, so I'm not going to go into too many questions there. Didn't post any, so not too much to talk about. But in any case, make sure to keep joining me on Tuesdays and Thursdays. We'll keep doing these live streams and keep providing you guys with some quality videos. Thank you, guys. God bless.